Welcome to How-To with Howco, the podcast that connects you with Howco team members who share their time-tested insights and knowledge covering all aspects of the car wash industry. Since 1969, Howco has helped thousands of car washers get started and succeed in the industry through Howco's planning, development, and operational services. I'm your podcast host, Bruce Hensley. In this episode, Howco Chief Financial Officer Brian Davis will share his insight and experience on multiple financial aspects of the car wash industry. Welcome, Brian.
Hi, thank you, Bruce.
This is a big, broad subject, so we'll probably be covering all sorts of aspects. So, say I'm a newcomer to the industry, how do I start figuring out how much money I need and where do I get it?
Well, that's a great question, and we all need more of that, right? So that's a great place to start. So when we think about car washing and getting into the business, there's a couple different ways to do that. One is you start a car wash from scratch, meaning you buy the land or you lease the land, you build the building and build out the equipment. Your other option is you can go buy an existing car wash and get into the business that way. So those are two very different paths. If we have a new car wash where we're going to buy the land or lease the land and then build the wash from scratch, we're typically going to go through either traditional bank financing, where I go to my local bank or my national bank, whoever I have that relationship with, and talk about how do I want to finance this car wash. More times than not, if you're new to the industry, they're going to push you into an SBA loan or a USDA loan. And the reason they do that is that way the bank has some guarantee back if something were to go wrong with the loan. And so from there, we make a decision point of whether we stay with the traditional bank financing or we're able to go to the SBA side of it. If we go SBA financing, then that being a government-backed loan, we have a lot of hoops to jump through. It's better for the bank. It's a little bit easier for the customer in certain ways, or for us as the consumer. There are a lot of advantages to SBA loans. We have longer amortization periods for the loan. We have more flexibility in the way that we can structure some of those loans at times. So there we typically have a higher loan to value, meaning that that's less money we have to put out of pocket into the project at the beginning. On a SBA loan, we typically can finance 85 to 90% of the cost of the project. And so when we talk about cost of projects for car washes, there's a pretty wide range. If you're doing a self-service kind of wash, we may start as low as $500,000 to $750,000.
When you say we finance, Howco does not finance car washes.
We do not finance car washes, but we have partners that we work with that we can connect you to that have expertise in that industry. One of the things to keep in mind when you think about banking and banking relationships and projects, all banks are not created the same. Just because your bank is great at maybe financing restaurants, car washes may not be something they like to do. So they may not be the best option for your car wash financing. It may be a specialty lender that does SBA loans only. There are quite a few of those across the country that do that. They are really strictly for SBA or USDA lending. There's a little bit of difference there, that some little nuances of population and those kind of things. But the end of the day, you can go to a specialty SBA lender, which you typically will have a higher likelihood of getting a successful loan approval that way. The flip side of that is as your traditional bank, if you're going with traditional financing and not SBA financing, then more times than not, that relationship with your local lender will play a bigger part in that loan approval process than strictly the formulas that you look at from an SBA side.
How about collateral or down payment? How much does my investment group have to have up front if I'm going to borrow, just say $5 million? How much do I need?
So if you look at that from an SBA perspective, the average is roughly they will finance 85% of the project. So if you need 15%, then you're going to have 15% of whatever that project cost is. So if you go traditional bank financing, you typically are going to be closer to 25 to 30% of equity or cash that you would need for that project.
And of course, it varies depending on whether you're refurbishing a car wash and wanting to borrow money, or you're starting from the ground up, and whether it's a self-serve or an express or a big fancy tunnel.
That's correct. And those dollars amounts, like you talked about, range widely then. So if you look at the average tunnel, you're probably going to spend in the neighborhood of at least $4 million by the time you have equipment, real estate, building, and a little bit of working capital.
How long does it usually take to get the finances settled, and are there any tricks of the trade coming from the Howco CFO?
There certainly are. One is you need to be prepared when you go into the door. And when I say that, what that means is I need to have my business plan. I need to understand the demographics of the area that I'm going to go in so that I can give a financial forecast or some kind of model to my bank, whether it be SBA or traditional. At the end of the day, that banker has to make a decision based on what they see the success of that wash being, and that's how they look at how much debt they can give you. So if, for example, if that wash is going to provide $1 million a year of free cash flow before you have to pay any debt, then that loan amount that they're willing to do is going to be based off of that free cash flow. And usually what they do is they have a ratio called a debt service coverage ratio. And my debt service coverage ratio typically in the car wash world is going to be 1.25, 1.35 to 1.4. And what that means is I need to have enough cash flow that I can take that and divide it by 1.3, 1.25, and have that as my debt, right? And so, or my debt payment. So if my debt payment is $100,000, I need to be able to multiply that by 1.25, so it's $125,000. So that would need to have that much in free cash flow to support that $100,000 a year of debt service on an annual basis.
How about if I want to buy an existing car wash? How do I figure that financially, and wonder if it needs some refurbishment after I buy it?
That actually, more times than not, is an easier path than starting from scratch. So when you start from scratch, then you're looking at, you have to go through all those processes with land, with building, and all those financial modeling. When you have an existing wash, you really already have the financial model somewhat put together for you because you have historical numbers that come from that car wash. How have they performed? What has been their revenues? What's their cost? How many cars are going through that wash on a normal basis? So you and the banker and your financing partner have concrete data that tells you, hey, I know exactly what this car wash is going to be able to do, or I have a pretty good idea, versus when you're starting from scratch, we're all taking an estimate or a guess at that a little bit, right? An educated guess, but you're still estimating based on different factors. Now, you mentioned refurbishment. When you buy a wash, more times than not, you're going to need some additional, some new equipment, maybe some refurbished equipment, whatever that is to help process that. So when we think about that, we think about it a couple of different ways. One, is that equipment strictly just to make sure the wash stays running, or is that equipment going to be able to increase the number of cars we wash? So if it's going to be able to increase the number of cars we wash, we can add in some of that additional cash flow in thinking about what can we afford in terms of new equipment. Strictly a refurbishment, we have to factor that into that loan amount and how that impacts what we've seen historically about real cars and real dollars that go through that wash. So if I need to go buy another $500,000 worth of equipment, I need to make sure I understand what that debt impact would look like on the current numbers I'm purchasing from. Now, typically, if you're going to have to do a large refurbishment or you're having to bring in new equipment, then you're going to have a talk you need to have a conversation with the seller, because there should be some negotiations around the sales price to help offset some of that.
How about if I have the opportunity to buy the land and build a wash? Can I bundle that loan, or is that two separate transactions?
So the way we look at that, if you can buy the land, you can use that land as equity in order to build the wash. That's the equipment, the building, whatever else you may need. That is one way to do that. Also, if that land has higher value than the equity that you need, you can still contribute it as equity, but you also may be able to get some cash out of that to help with working capital and otherwise as well.
How about if I have a loan on the land?
More times than not, that lender is going to look at those two loans combined in order to say, hey, this is my total debt, so this is how much that wash has to provide, unless you can show that you have other sources of income that is handling that debt.
Okay. This is How-To with Howco podcast, and we look forward to you joining us for subsequent episodes that help car washers plan, develop, and operate their business. For more information or to contact the Howco representative, please visit howco.com. I'm your host, Bruce Hensley, and we'll see you again soon for another episode of How-To with Howco.